Check, please.
Welcome back to Everything Money. In this video, we're going to talk about Facebook and the Meta platforms. We'll give you an update on the stock. It's bad. We'll tell you why we like it. We'll look at the numbers. We'll use our software to look at their financials, where it's headed, where it's going, and use our stock analyzer tool to show you what you could be paying for the stock moving forward. We'll also trade this stock at the end with Mo. All this and more. Stay tuned. Paul, give me Facebook and Meta, baby.
Thanks, Seth. So guys, if you've watched our videos, you know I am buying Meta. I am buying Facebook. Does that mean you should? No, because I'm not your financial advisor and I have other reasons to invest. But I'm going to go through the reasons why I am buying the stock. It is plummeting. And guess what I'm doing? I'm sleeping like this at night. Now, the thing about when a stock goes down, somebody asked this in our community recently about, hey, Paul, what do you do when a stock is plummeting? To me, I use it as an indication for me to go research again, make sure my thesis still makes sense to me.
Reassess the position.
Reassess the position, right? Just like when the stock goes up and up and up, you want to reassess if it's still worth owning it. When it goes down, reassess if your thesis makes sense still. Because remember, guys, 80% of value plays aren't really value. They're value plays for a reason. They don't really make any sense. They're plummeting for a reason. But the 20% that aren't, Facebook hit a peak of 380, 385, something like that. It's now at what?
16. Oh, whoops.
Well, let's actually pull it up right here in our software. And guys, cool thing about our software, people have been watching, we now have live pricing on our software. So it'll constantly change for you. So right now, it's about half of what it was at its peak. It's amazing to me that people love it at 385 and now they're scared of it at 194. And what was the reason? They had slowdown of user growth. It actually went to negative, and people are like, "Oh my guys, they have 2 billion freaking users, active monthly users. Of course they're gonna." That the world is 7.4 billion, really? And 5 billion at 7.4 live in.
They have nearly 3 billion if you count Instagram and WhatsApp.
No, I think that was including that, wasn't it?
2.9 billion in total.
Oh,
with all usership of.
Oh wow,
of Meta.
So half the world,
half the world,
almost half the world, not really half, but so. Now, my thesis on Facebook is, even though it has a max, guys, its user growth is not going to be big. The world will get bigger because I do still believe that Facebook is the number one social platform. They have Instagram, they have WhatsApp. But my thesis is they still haven't maximized revenue per user, okay? They're still growing their revenue base through advertising. Google is an advertising business, right? I'm thinking Facebook is going to be the same thing. And as time goes on, they're going to spend all their money on making their advertising better and better and better, right? What do you think, Seth?
Paul, what I'd like to do is show our users why we fell in love with this company from a valuation standpoint and what they're doing underneath the hood. Let's get to the 8 pillars.
Okay. And
show people why we thought number-wise we're in love with this company.
So those of you who watched our channel in the past, and if you haven't, go look at past videos. We're going to do a little bit more thorough on the 8 pillars as opposed to skipping right to the 8 pillars tab. So pillar number 1 is we want the 5-year PE under 22.5. It's at 21.58 at the check mark. The 1-year PE, guys, is 13.7.
Very nice.
Pillar number 2, we want the return on invested capital greater than 9% over the last 5 years. It's 15.5. This means they do an amazing job of earning cash flow on the money invested in the business through debt and equity. Okay? So 2 checks so far. No dividend paid. Look at their free cash flow. Last 5 years of 23 billion. Last year is 39 billion. Does this look like a company that should be dropping in half? Now, forget about valuation, which I do care about, of course, number one thing, but this is a growing company. And I'm going to show you more. And I still think it has a lot more room to grow. So, pillar number 3, we want revenue growth over the last 5 years.
I'm sure this is absurd.
Oh, yeah. So we go to the income statement. Guys, look at this. 39.9 billion to 118 billion in the last 5 years.
Yikes.
Pillar number 4, net income growth. Scroll down a little bit. 15.93 to 40 billion. Check mark there.
Gosh, how about the shares outstanding, Paul?
And
go on. Sorry,
they're investing how much money in this metaverse, right? So that's being capitalized, but it's depreciated every year. Pillar number 5, shares outstanding. So 5 years ago, we actually have to go to the 6th year because it's the end of the 6th year. 2.88 billion down to 2.76. So not only that, they're also buying back shares, which I actually wouldn't have agreed with in past years, but now it's getting to the point where it's getting cheap, where they have nowhere to invest the money in the business. They should buy back more shares. because it's giving you a higher ownership of the company. If a company has 10 shares outstanding and you own one, you own 10% of the business. If they buy back 2 shares, you still have your one, but now everything is split 8 ways. You own 12.5% of the business now. So this is a benefit for those who are staying strong with the company, and as they get cheap, they can take their excess cash flow and buy back shares. Pillar number 6.
Total long-term liabilities divided by 5-year free cash flow. I want this under 5, Paul, this multiple.
So if you remember, the free cash flow was $23 billion, the 5-year free cash flow. We multiply that by 5. That's $115 billion. We want their total long-term liabilities under $115 billion. So we go to the balance sheet. We scroll at the bottom. $20 billion. Even better, their total liability is only $41 billion. Even better than that, they have $67 billion in cash and $40 billion in total liabilities. This company ain't going under. Not only does it have enough cash to pay off all of its debts, that's like saying, guys, in your personal checking account, you have enough money to pay off your mortgage, your entire mortgage, all your car payments, student loans, every debt you have, and still have money left over. But not only that, they're also spitting off cash flow in excess every single year that's growing. Okay, pillar number 7 and 8 have to do with cash flow. We go to the cash flow statements. We want growing free cash flow. Now, I do add this line. Your Uncle Paul is a very nice and generous man. He adds this line here to do the math for you. 17.48 to 39 billion. Check mark there. And our final metric is we take this 5-year average free cash flow, we multiply it by 20 for a market cap to start at. 20 times 23, $460 billion. What's the market cap?
540.
Oh, okay. So versus 540. So it's an X. It's the 1X we have. Let's go to our 8 pillars tab to see it. The 1X we have. And guess what? I'm okay with this because I still think free cash flow is going to grow over the next few years because they still haven't maximized, in my opinion, as the world gets more and more active online. And all the Karens of the world go on Facebook to complain. They're going to be advertised everything, Bed Bath & Beyond, Williams-Sonoma, everything imaginable. And they're advertising. Listen, we have a startup, DynastyOwner.com, for those of you who love fantasy football. We're advertising on Facebook. We love the Facebook advertising. It's gone very, very well for us. We are going to spend a few $100,000 this year on advertising on Facebook just for that.
Mo, what is the scuttlebutt in the news that's opposite all these wonderful numbers? What are you saying on your morning show that people are saying about Facebook and Meta?
Well, everybody just says it's a dead company because all they see is all they focus on is user growth. Then they look and see what the media is saying, the general mainstream media, about how they're going to lose all of their users in the UK because it's a risk factor in the 10K, which is one of my favorite risk factors of all time that swept the media. Remember when that happened?
Yes.
That was incredible. But you look at the numbers. You look at the value. I mean, everything for them is good. I'm happy if people keep calling this a dead company.
And I do
it a dead company all day.
Yeah, and I think the stock is going to go further and further. I'm already down 30% of the stock, and I think it's going to go further down. And guess what I'm going to do? I'm going to buy more shares. I really believe the thesis is still there. Unless I all of a sudden heard some reason why I think some other social media platform is overtaking them. I mean, they have the 2 biggest ones, right?
Yeah.
What's bigger than Facebook and Instagram? And WhatsApp. I mean, guys, I love when we go overseas, I just say to people, what's your WhatsApp?
Yeah.
Because everybody overseas uses WhatsApp. We have 330 million people in this country, probably 4 people. Everybody, like 3 of us in this room use WhatsApp. The rest of the people don't. But overseas, everyone uses WhatsApp. Everyone does. And now with the Meta, I personally believe Meta is the future, and they changed their name to Meta. Now, don't get me wrong. I'm not saying that guarantees them anything, but they spent $10 billion last year on Meta, and they plan on spending more as time goes on. They want to be the leader in Meta. Facebook Marketplace. What's Craigslist?
Old Facebook Marketplace.
Yeah. Facebook Marketplace is awesome. I look at stuff on there. I sell stuff on there.
Yeah, it's Craigslist with an instant chat. I was talking with someone last night, and I drove someplace to buy something on
What'd you buy, Seth?
Well, I was looking at a Magic collection, Paul.
Here you were.
And I'll tell you why.
Why do you need to ask that?
I'll tell you why, Paul. It's because I'm now noticing as the world starts to collapse a little bit under pressures of war and stock market.
What's happening to prices of
people are getting desperate. Prices are falling. People
That's
are looking
weird
to
because
sell.
I was told by somebody that Magic the Gathering cards always go up in value.
Always was the word I used.
Can we please find verification of always?
Oh, okay. Well,
Mo, Tim, was the word always used? Maybe I'm wrong.
I don't know.
I think maybe I'll give you a caveat. You might have said they have always gone up in value.
Well, they have since gone down. If you are an investor at home and this sparks an interest in you and you say, wow, I need this data behind Paul, he'll show you how you can have this within the hour. Go ahead, Paul.
So guys, all the software we created specifically because it was asked for us from the people who watch our channel. We were doing our own analysis with our own Excel sheets. They said, listen, make us a software. And we did. So what do you get with the software? You get 30 years of financial data. You get access to Seth Mo and I. You get everything you've seen here and everything that's coming. I'm going to show you guys in 2 seconds stock analyzer tool on our watch list where you can actually analyze the company, determine what you want to pay for it, and then add it to your watch list at that price, and we will notify you when it hits that price. So let's say you say Facebook, I want to buy it at 150, put it on your watch list. It'll tell you, hey, Facebook just hit 150, go buy it, or go do more research, whatever it is that you wanted the watch list for. You get the chat feature, over 6,000 people in there discussing their ideas because everybody here felt alone in their investment journey, and now you can discuss everything with people. I get messages every day. Paul, what do you think of this? And I'll say to somebody, what's your thesis? Oh, I like this. Sometimes they come up with things I never even thought of. And that's the point of the community. Like-minded investors, if you guys can use this software to make 1 or 2% a year or
not lose
1 or 2% a year from stupid investments, it will lead to hundreds of thousands, if not millions of dollars. It's only $1 per day. No brainer, less than a cup of coffee. Sign up. 2 ways to sign up, everythingmoney.com or Patreon for our foreign users. The benefit of everythingmoney.com is we're not large enough to charge sales tax yet, so you'll save that for the foreseeable future until the government comes and wreaks havoc on us.
You can lock in your price today, and as the pricing goes up for new users in the future, you will always be locked in the price you pay today.
Seth.
Paul, show them that incredible stock analyzer tool, which you can use to buy the stock. You can use to set price targets to buy puts or sell puts and covered calls. And people are utilizing this, and I love it. Go ahead, Paul.
All right, guys. So here is the stock analyzer tool. All right. So what we're going to do here is I'm going to make it a little bit smaller to get the whole page in. 10 years of analysis, 3 items. Now, I don't think revenue growth from Facebook will be the 41% it's been the last 10 years. My goal is to be conservative and to make assumptions about the future that are conservative and buy companies that fit that. So I'm going to go 8, 11, and 14. And for those of you out there watching previous videos, these numbers change all the time. I go off the cuff, and the whole goal is I shouldn't have to be so picky where like 11.4% makes it work. I just throw out numbers and see if it falls. Profit margin. Let's say their profit margin is going to be a little bit thwarted because of Meta. Let's go 29, 31, and 33. Free cash flow, I'm going to do the exact same number. PE, I'm going to go 13, 15, and 17, 13, 15, and 17. And finally, guys, I always do a 12.5% return because you can buy an ETF and get 9 or 10%. So for margin of safety and to buy an individual company, put in 12.5. Hit the analyze button. Guys, look at this. This is why I'm buying Facebook. And guess what? You can set any of these by hitting this check mark. You can set any of these to your price watch list. Now, obviously, it's under the price, but let's say I want to have it lower. I go add to my watch list. It's about to add it to my watch list. I'm going to add a notification. When the target price hits 150, below it, notify me. There you go. It's on my watch list now. Done. That's simple, guys. We've been reviewed by others. People have looked at our software and said the news alone makes the price worth it because of all the data you get. This is a no-brainer. Now you can have 100 stocks in your watch list notifying you every single time something hits. That way you don't have to sit there and keep pressing it over and over and over again.
If you like what you're seeing so far, make sure you fondle that thumbs up below. Mo, before we get to Paul's final take on what he's doing with Facebook and Meta, are people trading this? How's the volatility? Those people in the day trading community we have, what are they doing?
So this is a good stock to day trade, but I just want to zoom out here. This was a high of 385, and this was what happened during COVID. If I would have told you, when was it, September, that this would be at $193, you'd have said we're nuts. But look at it. This happens, guys. This happens to stocks, and you notice that big gap, and that's what we're going to talk about. So right now, I would put a tracker share on this or just put it on a very tight watch list. Eventually, this will turn up and go into the sweet spot from a long-term perspective. But what you can do for now, the good news is when we talk about gaps filling, you don't have a lot of resistance here. For this gap, you really have to get through the 25 and 50-day moving average as of right now. So this can certainly turn up eventually and fill that gap up, and you don't have to worry about the 200 and the 100-day moving average. Now, This is the place that you could have made money today. This was the day trading channel. Great volume came in late in the morning. You were over 80%. You had 2 awesome engulfing candlesticks that moved up, and you could have made a very significant amount of money today, I assume. I mean, this could have been, 192 to 196, somewhere in that range?
We did not day trade that today.
I was looking at it, but we were looking at it earlier, and
Probably
it wasn't
somewhere in
forming
here.
the formation
You were
yet.
probably right in here.
Yes,
but
and
your
it wasn't over the
stochastic
80% stochastic today. When
But
we
this
were
was
looking at it.
probably 11:30, I'm going to venture to
That's
say.
when I went to lunch.
Yeah, and so that's also it. So if you're patient and you find trends, you can do it. But this is a great stock to day trade just because it has that daily volatility, especially nowadays. Come on over to the Bitnast Nation to learn to do it. Day trade with all 3 of us live.
Paul, after all this mumbo jumbo with the numbers and the users and what is your final take on
My personal
Meta?
opinion is I'm selling puts at it at lower prices. I feel confident in their revenue growth for the future. Yeah, their user growth won't be there, but I'm okay with that. Listen, this is my opinion of it. I can invest in different ways. I sleep well at night being down 30% on my Facebook, being down 25, 30% on my Alibaba, because that's the great thing about value investing. If you know why you're buying and the thesis is the same, you want prices to be lower. You don't get upset when prices go lower. So I'm sticking with it.
And as far as user growth goes, I'm cool with only half the globe having it.
Yes, exactly.
I'm good.
Because you know what else? Growth. So this is the interesting part about Facebook. Growth isn't just about user growth. Imagine if Facebook had 0 revenue and they hadn't monetized yet and they had 4 billion people using their platform. And all of a sudden, God came down and said, you're going to lose 1% of your users every year. But then it's also said, but now you're going to start monetizing. Where would their growth come from? Revenue and profit. And that's my thesis here, that the revenue and profit growth and cash flow growth still makes it a growth opportunity. Yes, the user growth might not be there, but the revenue, profit, cash flow growth will still be there. Look at our good friend Jameson. Yesterday, I was at a store. I saw a pair of shoes that I liked. I sent him to Jameson because I know he likes the brand. I said, Jameson, I'm thinking about getting these. How did I message him? Facebook.
Oh, Facebook.
Yeah, I don't have his phone number. I don't care to have his phone number. But I messaged him on Facebook, said I love these shoes. He's like, those are dope, is what he said.
Our other friend, Monish Pabrai,
Yeah.
thinks Facebook is an easy double.
Oh, really?
Easy double within 3 to 5 years. Without Metaverse.
Well, good.
Good for us and him.
Yeah. Listen, it's going to take some, and either way, I love it.
Final thumbs up. Make sure you subscribe to get more of our content. We have 8 zillion videos on YouTube and we'll be making more all year. We appreciate the EM community and we'll see you next video.